The foreign exchange market, often called Forex, is where currencies are traded. Imagine exchanging your US dollars for euros before a trip to France. That's a basic Forex transaction. Traders buy and sell currencies, aiming to profit from the fluctuating exchange rates. The Forex market operates 24 hours a day, 5 days a week, making it the largest and most liquid financial market globally. It's a decentralized market, meaning transactions aren't confined to a central exchange like the stock market. Forex trading involves substantial risk. It's crucial to understand the market dynamics, leverage, and risk management before venturing into this complex world. Remember, not every trade will be profitable, and losses are part of the process. Islamic finance emphasizes ethical and moral values. It operates on principles derived from the Quran and Sunnah, guiding Muslims toward permissible financial practices. Two fundamental principles are the prohibition of riba, or interest, and gharar, which is excessive uncertainty or speculation. Riba, the charging or paying of interest, is strictly forbidden in Islam. It's considered exploitative and unjust, as it creates an imbalance in wealth distribution. Islamic finance offers alternative models like profit-sharing partnerships, known as mudarabah, and cost-plus financing, known as murabaha. Gharar involves excessive uncertainty or speculation, which Islam discourages. Contracts should be clear, transparent, and based on mutual consent, avoiding elements of gambling or extreme risk-taking. The permissibility of Forex trading in Islam is debated among scholars. Different schools interpret riba and gharar in Forex trading differently. Some argue spot Forex trading is permissible as a legitimate exchange. Others see it as impermissible due to interest and speculation. Muslims should seek knowledge from reputable scholars before trading. Section 4. The significance of intention in Islam. Intention plays a crucial role in Islamic jurisprudence. Every action is judged by its intention, and financial transactions are no exception. Even permissible actions can become impermissible if the underlying intention is wrong. In Forex trading, if the intention is solely to profit from currency fluctuations without any underlying need for currency exchange, it might be considered speculative and impermissible. However, if the intention is to facilitate international trade, investment, or fulfill a genuine need for currency exchange, it may be viewed more favorably. For example, a Muslim-owned business engaging in international trade might need to exchange currencies to conduct business. In this case, Forex trading would be considered permissible as it serves a legitimate business need. Section 5. Practical advice for Muslim Forex traders. Prioritize caution and seek guidance from knowledgeable scholars. Consider these factors. Consult a scholar. Discuss your trading strategies with a trusted Islamic scholar. Choose a reputable broker. Opt for a regulated broker offering swap-free accounts. Focus on spot trading. Minimize interest and speculation. Trade with knowledge and discipline. Educate yourself about the Forex market. Avoid impulsive decisions and emotional trading. Your intention and adherence to Islamic principles are paramount. Section 6. Conclusion and call to action. The permissibility of Forex trading in Islam is a complex issue with differing scholarly opinions. Muslims must approach this market cautiously, prioritize ethical considerations, and seek guidance from trusted sources. Remember, financial gain should never come at the expense of your faith and principles. We encourage you to share this information with your friends and family and subscribe to our channel for more insights on navigating the world of finance within the boundaries of Islam. May Allah, subhanahu wa ta'ala, guide us all in making righteous financial decisions.